What did you take away from Jay Powell's presser today, particularly when it comes to tapering?
Well, I agree with you that his emphasis on the employment picture kind of came across. When that question was asked, he went to employment first. And I don't know if you can read a lot into that speaking, but it strikes me that employment is front of mind on the part of the committee. I think the committee has sort of an image of the pre-COVID picture of 3.5% unemployment and participation that was substantially above where it is today. And I think that that's what they're really aiming for, is to try to return to that world as quickly as possible.
Well, let's listen to something else that Jay Powell said, Dennis, because it struck me, too, that he's saying we've got to see the improvement in jobs, but he's also saying, despite the fact that there's a Delta variant, which he said creates risk, that this stronger jobs isn't just an outlook, it's coming soon. Let's listen to this.
We're clearly on a path to a very strong labor market with high participation, low unemployment, high employment, wages moving up across the spectrum. That's the path that we're on, and it shouldn't take that long in macroeconomic time to get there.
Among other things, Dennis, does this mean that we're going to put even that much more focus on the monthly jobs report if we get a couple strong million-plus payrolls reports in a row, which some people are looking for? Does that maybe move up the tapering or make sure that it gets announced and started maybe by the end of this year?
You know, Kathleen, I did not hear any encouragement to the view of an early tapering decision and an early launch of tapering. What I heard in the press conference and what I read in the statement was really more of a stay the course, patience message, and monitor developments as they come along, but not not an acceleration of the tapering timeline. I didn't get that from today's press conference. You know, it seems to me that although he thinks that there's going to be substantial progress, he also emphasized there's a long way to go. So, you know, in the same breath, he was both encouraging and optimistic, and at the same time said it will take a while, it seems to me, to actually satisfy the committee that they've achieved what they want to achieve.
Dennis, I want to throw up a chart which I think is really telling. This is showing US real yields tumbling to fresh record lows. Of course, this comes as we see break-even inflation rates continuing to grind higher. What is this telling you about what market expectations are and fears are? Does this reflect the greater risk premium? Is this about the inflation premium or worries over growth?
I think it's a mix of factors. Jay Powell in his press conference was asked a question about the yield curve and about 10-year yields, and he's in so many words said, well, it's a lot of things, but I don't fully understand it. So if he doesn't understand it with the staff that he has to attack that question, probably a little bit presumptuous of me to give you an explanation. I think there are a number of things at work. I don't think it is a downgrading of a growth story, although growth will stabilize and will come down from the second quarter. I don't think it is a negative view on the outlook for the U.S. economy. I think there are flows into treasuries, both from abroad and in domestic vehicles that invest in U.S. treasuries. Those flows are creating lower rates. Spreads remain relatively tight. So again, I don't think it's a negative picture necessarily. And there may be some buying of the transitory inflation argument as well, reflected in these rates.
I'm starting to wonder what transitory actually means, if it just means, not forever or not indefinite, right? You say, Dennis, you're watching the Delta variant very closely here in Australia. We're back under lockdown for a large part of the population as a result of the Delta variant. When you take a look at places like Texas that are seeing 10,000 cases a day now, the return of the mask mandate, how much of a meaningful impact does that have on, the sort of all launches ahead variation of the pandemic recovery that we've been expecting from the US? Is there a sense that the risk is that there could be, one step backwards?
Well, it's certainly a big concern, and it's looming now as a concern about the direction of the economy. Jay Powell said something quite interesting in the press conference. He said essentially that with each wave, the implications for the economy seem to be diminishing. That's my rephrasing of what he said. So he, in so many words, said it's really not something yet that that at least the Fed is going to consider a change of direction in the economy. Obviously, you watch it, but he didn't seem overly concerned. And of course, it would not have been very positive for him to call out the Delta variant. What I noticed is he talked about, and the committee talked about the virus, but didn't actually use the term Delta variant.
So Dennis, when you look at the timeline on tapering, did you fine-tune your view at all? Jay Powell said it was their first deep dive into this. They are looking at the timing. They're looking at the pace. He said they would need to see a couple more months data on jobs, and he wants to see strong jobs. He also said, don't presuppose anything about Jackson Hole. He said, I'm just starting to write this speech. People said, oh, it means nothing at Jackson Hole. I also took it to mean, well, maybe he is going to, fine-tune or give us more of this message at the end of August.
I came away with the view that we'll probably not hear much about tapering in his speech to Jackson Hole. One reason is because the committee isn't there yet. He speaks for the committee, but he really isn't going to give a speech that signals a decision that the committee hasn't made. So I would say it's more likely earliest September meeting, the press conference following the September meeting. And I think the committee may be, watching the Delta variant. They want to see evidence in the fall that participation in employment has begun to strengthen, that people have taken jobs who may have stayed out of the workforce over the summertime for a variety of reasons. And so you think about the data timeline, you have to get to early October to have a jobs report on September.
Right.
And you have to get to early November to see what happened in October. It may not be a clear picture. I sensed a very deliberate process that is not going to be rushed in the decision on taper.
Okay. As I ask you this question, Dennis, I'm calling up one of our Bloomberg charts. It's a real simple one. It's the core CPI year over year. In the latest report, up 4.5%. The headline, 5.4% year over year. Powell says it's transitory. You agree it's probably transitory. But I want to ask you about the Fed maybe making the mirror image of the mistake it made 2015 to 2018. Janet Yellen's Fed had a forecast for rising inflation. Based on that, when inflation was only at 1%, they started raising rates. Now, Jay Powell and his team see inflation that has risen above. They think on their forecast that it will start falling back down. Do they run the risk of moving too slowly, just as much as the Yellen Fed moved too quickly?
Yeah, central banks always run the risk of misreading a situation and having to catch up. I don't think you should overplay that. I really don't think that the risk of inflation getting away from the Fed or hyperinflation or, really a persistent period of excessive inflation, I don't think that is a very high risk. He's emphasized, and I agree, they have tools to deal with that. They can really slow down the economy if they have to. And so I'm just not, too much concerned about that risk. It's always there. And of course, the big concern is that they get so far behind the curve, they'd have to slam on the brakes, so to speak. But I don't put a lot of weight on that scenario.
So what do you think is the biggest risk to the outlook, Dennett? Is it the Delta variant? Is it that the job market stumbles, that it doesn't pick up because people are still reluctant to go back to work, or because they don't have the skills for new jobs? What's the next big signal for the Fed, for Jay Powell?
A disappointing employment picture in the fall, which is going to elongate the period before tapering and ultimately before liftoff. A sort of ambiguous economy that could develop where you're not getting clarity, you're not getting clear signals, and a lot of cross currents in the economy, and a resumption of measures taken to deal with the coronavirus, with the Delta variant. That's the downside, it seems to me. If you don't think that that's likely to happen, in policy terms at least, not likely to happen, then you've got a very strong economy with a very positive outlook, and in all likelihood, they will continue to make progress toward their goals, they being the committee, in a reasonable time frame. And the forecasts that they have presented in the quarterly forecast, are quite reasonable, it seems to me. So you would see continued progress in 2022, and in all likelihood, conditions that will allow raising rates in 2023. What I would emphasize from my reading of the press conference and the situation is that I don't think this committee is going to be rushed into action by noise in markets or by lots of people arguing that we're entering a new period of hyperinflation or whatever. I just don't see that. I think this is a very steady committee, and they will act when they have to or need to, but otherwise really are going to kind of let this economy evolve and they hope, of course, achieve their objectives.